There's something incredibly motivating about seeing your passive income hitting new milestones. And this month, I crossed a new threshold that makes this dividend journey feel very real. I'm Nick, and this is the Dividend Growth Income channel, and in today's video, I'm breaking down my April 2025 Dividend Growth Income portfolio update, including my newest buys and how much income I brought in this month and where I'm headed next. So as I said, the portfolio this month crossed a big milestone. I'm now generating over $1,200 in forward dividend income annually, and which means I'm averaging $100 a month in passive income from this account. It's taken about 2.5 years of consistent contributions and disciplined investing to reach this point, starting completely from scratch. And while this number feels good, I also know we're just at the beginning for this account. Now here's where I stand against a few future goals. I'm 65% of the way to the next benchmark of $5 per day, over 50% of the way to $200 a month, 20% of the way to $500 a month, 10% of the way to $1,000 a month, and 5% of the way to this portfolio's ultimate goal of $2,000 per month. As of the end of April, the portfolio is valued at around $42,030. It's been hovering around this level for most of this year due to the market conditions, but underneath that, the dividend income continues to climb steadily. The current yield on the portfolio is 2.86%, with a yield on cost of 3.24%. Now, this might sound low for a dividend-focused portfolio, but I'm focused more on dividend growth and quality over chasing high yield. Performance-wise, I'm sitting on about 13% in unrealized gains with a total return of 17% when you factor in all of the dividends reinvested so far. So let's talk about dividend income for the month of April. I received payments from 8 companies, every single penny reinvested through DRIP. Here is the breakdown by date. On April 1st, Automatic Data Processing paid me $6.42. On April 3rd, Vici Properties paid me $20.37. And on April 14th, I got 2 payments. We had one from Agri Realty, ticker ADC, for $4.93. And we also had a payment of $12.56 from Mondelez International, ticker MDLZ. Then on the 15th, Medtronic, ticker MDT, that's a healthcare device maker, paid me $10.09. On April 21st, Main Street Capital paid me $6.51. That's ticker MAIN. On April 23rd, Cisco, ticker CSCO, paid $10.35. Then on April 30th, Mid-America Apartment Communities, ticker MAA, paid $12.13. That brings the total for April 2025 to $86.36. This is a big improvement from the $45.44 I brought in last April in 2024. That is an 83% year-over-year increase. It also beats my January 2025 total of $78.59. That's the last quarter where these stocks paid. So the dividend snowball is doing exactly what it's supposed to do, steadily rolling forward and accelerating as I add capital, and those reinvested dividends also go to work. April also brought 2 dividend raises to the portfolio. Always a welcome boost without lifting a finger. So on April 8th, Procter & Gamble increased its dividend by 5%, going from just over $1 to just over $1.04 per quarter. That continues a streak of 68 consecutive annual raises. Just a rock-solid performance from one of the best-run companies in consumer staples. Then on the April 10th, Agri Realty gave me its second raise in the past year, increasing the dividend by 1.2%. From 25.3 cents to 25.6 cents per share. Not a huge raise, but I'm always grateful to get that steady monthly payment. That is bringing their monthly growth total to about 3%. These are the kinds of automatic pay raises that make dividend investing so powerful over time. Even a small portfolio like mine here can compound faster than you expect when the companies themselves keep doing the work. What did I buy in April 2025 in the dividend growth income portfolio? Well, I added a total of $1,050 in new capital to this portfolio, which brings me to 28% of the way towards my 2025 contribution goal of $10,000. We started the year off a little slower for a few reasons, so I'm a bit behind on that goal, but there's still plenty of time to play catch up. All of my April buys were additions to existing positions, no new holdings this month. Just building up a solid lineup of names I already believe in. Here's what I've added. On April 3rd, I put $100 each into SCHD, VYM, and VOO. It's continuing to layer into my core ETF foundation. Then on April 4th, I added $50 into Chevron, ticker CVX, and $50 into Procter & Gamble, ticker PG. On April 15th, I went heavier on Chevron with a $200 add. Then on April 16th, I added $50 to Next Era Energy, ticker NEE, and then another $100 back into Procter & Gamble. On April 14th, I added another $100 into United Health, taking advantage of a 22% price drop. And on April 21st, I rounded off the month with another $100 into Chevron and $100 into Starbucks when it briefly dipped below $80, right around that 3% starting yield is where you'll see me buying Starbucks. So that's a total of 11 individual buys this month, all small, intentional, and mostly focused on high-quality dividend growth stocks and ETFs. Chevron was my biggest add overall, just taking advantage of the recent weakness in the energy sector. And just to be clear, these are only buys I made in this particular public portfolio because I do also contribute to my retirement accounts, including my Roth IRA, but those are not tracked here on the channel like this is. Just for full disclosure. The portfolio dropped 3.39% over the month of April. This is making it the worst performing month of 2025 so far. It also underperformed the S&P 500 after outperforming it over the last couple months. But performance for 2025 overall is basically flat at this point. We started April with an account value of $42,269.15. Then I added $1,050 in new capital and $83.36 in dividends were reinvested. But we still ended the month at $42,030, which means the account dropped $1,474 in value overall during the month of April. And yet the most important part kept growing. So despite the red month, our forward annual income increased, just like it does every single month, regardless of what the market is doing. Because we started April with a forward income of $1,158.06, and we finished at $1,200.96. So while the portfolio lost some value this month, the dividend snowball kept rolling forward, and it also gives me a chance to average down on a couple of really high quality positions in my opinion. As for what the rest of the year holds, I have no idea what's going to happen, but I do know that my income is going to continue to grow as long as I stay consistent. And here's a look at my projected annual income chart. And as you can see, my heaviest months are March, June, September, and December. Meanwhile, the weakest months tend to be February, May, August, and November. And the upcoming month of May is upon us. And I am only expecting a little over $30 in dividend income with just 5 companies paying me. That's 2 of my monthly payers, Main Street and Agri Realty, along with MasterCard, Procter & Gamble, and Starbucks. Looking ahead to June, though, I think there is a real shot that it could be my first $200 dividend month, which would be another fun milestone to hit. It's gonna be close. If not, then definitely by September. Now, here's a look at my current portfolio's holdings sorted by weight with the heaviest positions at the top. As always, there's my 3 core ETFs, SCHD, VYM, and VOO. And in one of my last videos, I got some comments about why am I holding both SCHD and VYM, since one dividend ETF could probably do the job. And there's merit to that. I get it. But since this is a public portfolio that I'm sharing with you guys, I thought it might be useful to build both positions side by side to track their performance in real time. So far, VYM is outperforming SCHD on price, but SCHD is delivering better dividend income and growth. And I'm totally happy holding both and watching the divergence play out and letting you guys see it play out as well. Now, as for the stocks I'm watching heading into May, with Starbucks back below 80, I'm likely to continue building that position. Despite the short-term headwinds the company is facing, I still believe in the turnaround story here, but I'm pretty strict with my entry. I only buy when it's yielding 3% or better. And we're back in that zone, or right close to that zone now. You can also expect a video in the next week where I'll break down exactly what I'm buying in May in a little more detail. Outside of that, I'm also going to continue building up my ETF positions. SCHD looks fantastic right now at that 4% yield. They're not flashy or exciting, but they form the foundation of this portfolio, and they make up much larger positions in other portfolios I hold. I like to add them consistently over time, especially when prices are under pressure. So that's my April 2025 dividend growth income portfolio update. And yeah, hitting $100 a month in forward income, that might not sound like a big deal, but these small milestones, they make a huge mental win and encouragement to just keep pushing forward. And at least for this investor, it's working. It took about 2.5 years starting a portfolio to get here, starting from zero, started with $100 actually. But I'm pretty confident we'll hit $200 a month a lot faster than 2.5 years. as the snowball is already rolling. So drop a comment and let me know, how's your dividend income looking this month? What milestone are you working toward? A lot of you guys have huge portfolios. I love hearing about it. And if you're just getting started building your own dividend portfolio, I've got a new video coming soon where I'm going to walk you through 10 stocks I would use to start completely fresh in 2025. So make sure you are subscribed and have your notification bell on for that. And if you want to dive deeper into this portfolio here and step through each position, click through to this next video I put out a couple weeks ago highlighting where I'm at with each of these stocks and how I see them as valued. Thanks so much for watching, and until next time, my friends, keep investing.